from the point of view of shareholders getting paid, we just dividend out the money that comes in, and we've steadily increased it from, because we're doing it on a monthly basis, from 0.1 of a penny per month, or 1.2 cents, to 0.15, which is 1.8 cents per year. So adding the equivalent of 0.6 of a penny per year. So the growth rate has been from 1.2 up to 1.8, up 33% to 2.4, up another 0.6 to 3 is 25% to 3 cents. And then we usually do this in July. So this past July, we increased it from 0.25 to 0.3, which is 3.6 cents annualized dividend, which is up 20% year over year. And of course, over time, that's led to an increase in the share price, which is the capital gain part. So if you're talking about new investors right now, we've been at the 3.6 cents on 50-cent investment, which is a 7.2% starting yield on this diversified portfolio. And the idea is over the next year, we'll try to increase again from 3.6 cents to 4.2. That'll make it an 8.4% yield. But the idea is to increase create the capital gain by increasing the price for new shareholders to 60 cents. So the combination of the two is 10 cents in capital gain on a 50-cent investment as we increase the price to 60 cents. And, on a cost basis, you're getting the 7.2% in cash going up to 8.4%, in 2024. We summarized all this data and just projecting what we've done over the last 5 years. You can see this sort of simple linear projection, as far as our growth rate and our returns, right? So that's the history as we've added catalogs, or, the one thing that always stands out on this chart is we had these limited 10-year deals, the one that included the Justin Bieber song. And so we tried to get rid of those 10-year deals because we obviously prefer the life of author 100-year deals. But otherwise it's just cherry picking these increasing cash flows each year and then, adding to the dividend. And so it's been a significant double-digit yield.
If I'm somebody interested, what I'm getting in return is essentially three components. Number one is, I think you said 7.2% return, which is the dividend you're sending out, which you have planned to increase next year, and into 8%-ish. And then you also have the plan to increase the share price, which is capital gain appreciation possible. And also you have the plan to go public, which is a few years down the road, which may or may not realize, but that's another potential added return.
That's right. I wouldn't say the listing idea is several years down the line, but again, the idea is to create a long-term asset anyway. But it's just waiting for interest rates to start to decline again. And I guess the bonus capital gain in that situation is that, based on this strange reference point to the gold business, they trade, notwithstanding the business of mining and gold, they trade at a 1% dividend yield. So it's kind of a remarkable metric, but that's the key ingredient we can test as we go public, is how big or how interesting is this asset class for the average investor to put into their TSFA or RSP, where you say, in their case, using the gold royalty model, every 10 million paid out as dividends at 1% makes the company worth $1 billion. So, that's what we're headed to, but by a different means in our minds. That it's going to be the fact that people want to own a piece of something in a different, and we've got those millions and millions of fans of Rolling Stones, Who, and Kinks. Avicii's got the 36 million we showed you, and some portion of those fans will want to own a piece of this so they can brag. If you own a single share in Music Royalties Inc. for 50 cents, you can brag to your friends that you own a piece of Satisfaction or Painted Black or Don't Stop the Music. So if we go viral, then who knows how high. Right. So that's sort of a non-linear, maybe exponential return. Now, if we go to the actual specific quarterly payments, which Connor can bring up. In this business, there's two big performing rights organizations in the U.S. One is ASCAP, American Society of Composers, and the second one is BMI. So these quarterly wires. So after we made our purchase from Jordan Sukoff via the royalty exchange for 145,000 US, we started getting the quarterly checks. So it's not obviously as specific, as a bond payment, which is a fixed coupon. It moves up and down with the streams of that particular quarter, which is also on a lag basis. Note that 2021 was unusual in that there was 5 payments when they changed the quarterly payment figure. But the point in simple evaluation terms, which you're going to ask is, okay, how do you decide what you want to pay? Well, back in 2018, there was virtually no interest in the bank. Government bonds were, 1, 2, 3% at the most. And so to get a 10% yield for something that's going to last over 100 years was very cool. And we've seen that slow, steady growth of, 20% really, where we're now estimating we'll end up the year at, virtually double what we started, back in 2018, and, virtually a 20% yield. 18.8 is where we're at now. So a significant double-digit yield. So, and the bottom
is that 18.8? Is that yield on cost? Is it annually?
Yes, that's just basically saying we invested 145,000, and even though we're amortizing it on the financial statements, and as I said, the reality is, if you look another year, the 124,000 plus another 21,000 will get us to the 145. We would have received all of our money back. So imagine the rent on your building, getting all the money back on the capital cost back. No renovation, no moving tenants in and out. Right. None of that, just participating in this international nonprofit collection system. And it's a remarkable, right, diversified passive income.
Yeah. But what is that 18.8? Can you just elaborate again for people who are?
It's just 27,000 US dollars income, right, divided by the 145,000 cost.
Got it. Just that. Okay. And that's just for that 1 year, right?
That's right. This year, 2023.
2023. Got it.
So, Great. So really, everything we've done since then has just been to try to find different situations along this, simple example, driven by this one key song. And now we've built up over the last 5.5 years, 7,000 songs. But for the listeners that want to see where primarily where the dividends are coming from, just log onto your Spotify, look in the search bar, and you can see the top songs that are driving the income. So if you think about it, if you just say, if we've got 100 good songs throwing off $20,000 US, that's $2 million US. That's the simplest explanation for what we've created.